Torsten, you said as Kevin was speaking that this looks like Goldilocks to you?
Jay Powell was right. I mean, he said that we should worry about the economy. He did clearly said this is not overheating. And honestly, this is exactly not overheating. Average hourly earnings 3.2, less than consensus expected 3.3 here according to Bloomberg. So it's clearly telling you that this economy is still chugging along very nicely. Clearly, I mean, it is inflationary in the sense that wages did go up, but they just didn't go up as much as we had expected. And at the same time, the unemployment rate 3.6. I mean, that's really low. That's at the bottom of the Fed's own expectation. So this is, I mean, Goldilocks is the best description of this.
I would say from my perspective, I think this is confirmation that the bond market had gotten a little ahead of itself in pricing in cuts for this year, right? We're still seeing very strong growth, employment growth. Fundamentals in general are very strong. And this is again, a robust, very robust economy. And it's probably a little premature that the market started pricing in cuts for this year.
It's also telling you that the narratives we had over the last few months, people worried about China's slowdown, they were about European slowdown, they were about a trade war, they were about Brexit. I mean, all those worries, it looks like all that's been pushed behind us, and now the economy is responding and saying, well, maybe we shouldn't be worried about these downside risks as much. And literally with employment going up so much, that's a strong signal that some of those worries, as justified as that may be or not, seem to at least be behind us for now.
I'm not trying to find some half-empty part of the glass, but should it raise some questions about the models we had going in? If you went back 3-4 years and you said to an economist or the Federal Reserve, we're going to have these kind of numbers, they would not believe it.
In particular, not when you think about that normally we're speaking about Q1, first quarter is always weak, so maybe we'll get some rebound in the second quarter, but we didn't see that this year, so this should have been more steady. Also, the other thing is that we had a government shutdown. That didn't really show much up in the data, so that also now shows we should have had something steady, but it still shows up as a much faster number. So you're right. I mean, the headwinds are just fading, and I think this is clearly telling you that the economy is still relatively strong.